Hello, today's Monday, August 23rd, 2010, and this is Brian Shannon from AlphaTrends.net. Let's take a look at this S&P 500 because it really is a mess. If you really look at it the last 3 months, though, we've been in this range all but a few days. We've basically traded about 104.5, 105 to that 113 level, and I say all but a few days, and those were just a couple days there, late June, early July. So it looks like the market is heading down back towards the low end of that range. How it acts when it gets there is anyone's guess, but it does seem as though it has an appointment with about 105-ish or so. We remain trapped under that important level of 109. If for some reason somehow the market is able to recapture that 109 level, then maybe we turn a little bit more neutral. However, looking at this 30-minute time frame, you can see we have these lower highs. Today the market gapped up basically right up to some resistance that it has seen recently and the level of that declining 5-day moving average. So that's not something you want to see as a failure at the declining 5-day moving average, especially when you have such a negative backdrop on the larger term time frames. That weekly time frame continues to be just a horrible looking picture with these lower highs. We still do have that possibility that we can maybe throw out there out of an inverted head and shoulders pattern, but that's a real outside chance. In my mind, you're better off looking at it as in terms of lower highs, and we have these lower lows, so we're likely to probably at some point test that 101 area. But on the daily time frame, let's see if we get down to 105, how it acts there at first. Right now, when you look at important groups such as semiconductors, which are down at the bottom end of their 3-month range, and the financials, which are down there as well, they don't seem to be indicating a bullish picture or any real hope that the S&P should be able to hold up. When you talk about the S&P 500, also there's been a lot of talk about, today was supposed to be Merger Monday, and that's, I think, got a lot of people excited on the open. But if you look at the recent mergers, the one that was announced last Wednesday that kind of got this market moving a little bit with Potash, and then we had the Intel for McAfee deal, I believe that was on Friday. The market is trading well below both of these deals, and that resistance is up at 109. So you might hear headlines that the market is going to be held up because of the mergers and acquisitions activity, but right now, in spite of a couple big headline deals getting done, price action is not holding up, and that's what you need to be focused on, is price action. So short term, looks like we're probably headed for that 105.5, 105 area, and beyond that, we've got an ugly looking picture. Whether you want to call this, as a result of the death cross of the Hindenburg omen, or looking at this bigger head and shoulders pattern, that's all just kind of interesting side line type stuff. When it comes down to looking at technical analysis, what we want to see is what's the flow of money. So on the daily time frame, it really still remains more neutral, but when you throw in what the NASDAQ looks like, the semiconductors, and the financials, then you start to look at it a little bit more suspiciously and drill down to the shorter term time frames like the 30-minute time frame. And with that declining 5-day moving average and a real obvious pattern here on the 10-minute time frame as well of these lower highs and lower lows, it really remains guilty till proven innocent here on the near term. If it could somehow get back above 109, then that would change and I think that 109 level is going to be important basically the rest of the week. Shorter term, I would think tomorrow 108 will be an area of resistance, and it just happens to be that they're at these round numbers. If we break last week's lows at 106.75-ish, then it appears we're probably headed for a test of at least about 105.80 or so.